So the Dow Industrials extending its winning streak, closing above that 22,000 mark yesterday once again, ending in positive territory for a fourth straight session. But we are seeing a pullback this morning. Futures are near the lows of the morning, and we want to look at what this market is counting on, particularly with the uncertainty over the president's agenda. Joining us right now is the Chief Economic Advisor for Allianz. That is Mohamed El-Erian with us. Mohamed, it's always a pleasure. Thanks so much for joining us.
Thank you, Maria.
First, let me ask you about what we saw take place in Washington this week, Mohamed, and how it's impacting the agenda and how that may impact markets. Because all of those business leaders stepping down, you know many of them, I know many of them, they wanted to take a stand and said that what was going on in Washington was too much of a distraction at this point. What kind of an impact is that going to have?
Look, it's not good news for two reasons. One is that you don't get the input of the business community at a time when the administration and Congress is looking at tax reform, infrastructure. And the second reason it's not good news, it drowns out any discussion on infrastructure and tax reform. Remember, you've got to design these pro-growth measures, you've got to get buy-in, you've got to get implementation, and for that you need focus. And the focus right now is elsewhere.
Yeah. Do you think they can get back on track, Mohamed? Do you think it's priced into this market that we will get tax reform, or are people giving up on this at this point?
I think people have pushed back their expectations for tax reform. They are comforted by a few things, by a global economy that's in Goldilocks mode, not too hot, not too cold, by central banks that remain supportive of markets, and by all this money that continues to make its way into the marketplace, including from corporate balance sheets. So for now, people are saying, I know tax reform is important, I know it's been pushed back, I know it's a good destination to have, but let me enjoy the journey for now.
Yeah, it's a good point, and I'm glad you brought up the Federal Reserve, Mohamed, because the top story, one of the top stories in the Journal today is about inflation and what we heard from the Fed yesterday. What was your takeaway on the Fed minutes?
We heard two things from the Fed on inflation. One is they are uncertain as to why inflation has not gone to that 2% target. And two, they disagree about the implication of that for policies. And I think that's important because it's going to make the Fed slightly less hawkish, or it will make it continue to be dovish. So yes, the probability of a Fed hike in December is still there, but it's slower than it used to be.
Oh, interesting, because I guess the Federal Reserve is really split at this point over how to handle the pace of interest rate increases. The Fed minutes released said that there were concerns about the effect potential hikes could have on inflation. So you do think that that what we're seeing in inflation, what we're seeing in the economy, is pushing out the string of rate hikes?
I think it is if you have a conventional mindset. And the conventional mindset is that there's a trade-off between unemployment and inflation. And if inflation isn't flashing yellow or red, then stay loose on monetary policy. I look at it slightly differently. I say beware of the financial consequences of interest rates being too low for too long. Yes, inflation may not be at 2%, but the longer you stay too low for too long, the greater the risk of financial instability down the road.
How would you be allocating capital right now, Mohamed? What do you want to do if you're invested already in this market?
I think you want to reduce your dollars at risk, but put them in sectors that are still underperforming. For example, if you're just U.S. focused, get a bit of global exposure. That includes in tech. Look at emerging markets. There's still opportunities there. So stay invested, reduce the dollars at risk, but diversify into areas that have relatively underperformed.
Meanwhile, you speak about dollars. The dollar has been recovering a bit, but it's been a tough year for the dollar. Talk about the world economy a bit as Japan and the euro area are showing signs of growth. What's the story on the dollar right now? Why are we seeing the year that we've seen? And, of course, given this recovery a bit, do you think that's sustainable?
And it's an important issue. In a way, it's a good thing that the dollar has weakened because that helps competitiveness, that helps growth. Why has it weakened? Because markets have repriced growth prospects in favor of Europe, and they've repriced interest rates expectations in favor of Europe. You know, it's funny, the ECB minutes were released today. And what is the ECB concerned about? About the euro being too strong, about the euro being a headwind to growth. Think of a strong currency in today's economy as a hot potato. No one wants a strong currency. We, for now, have had a weaker currency, and that's going to help growth, and it's going to help corporate profits.
Yeah, so that's a really important point.